What's going on, everyone? Welcome to module number 5 of this day trading course. In this module, I'll be covering entries and show you exactly what entry patterns that I use to enter of these supply, demand, support, and resistance levels. So before we head into the charts and show you actual real life examples, let me just cover a few points on the slide. So in the previous modules, I showed you guys how to find the right location to trade off and what to look out for, especially with support and resistance manipulation. Now we get to the entering section of those locations. So entries are about finding repeatable patterns that work over time, and it's also a lot about the timing in the market. So we always need to wait for the market to open at 9:30 EST time to see any of the entry patterns that I'm about to show you. For me personally, there's no really any point in trading the pre-market. I have done that in the past, and I think those are just stupid mistakes that you can make because the market is just a lot slower, doesn't move as quick, stop loss have to be bigger, the spread is also bigger. It's just not worth it. Just wait for the 9:30 open, have patience, and trade when the most volatility and volume is actually in the market, which is once the market opens at 9:30. Now, sweeps are a key rule or a key thing to look out for entries. So for my entries, I use a lot of double tops and double bottoms. You can use these on different time frames, the M1, the M2, the M5. Me personally, I really like the M5. I like to be more patient with my entries. I like to see actual good confirmation. You will obviously on the M1 see a lot more double tops and double bottoms happen, but they will just fail a lot more than, for example, on the M5 as they happen with a lot less frequency. Now, this is really up to you. I recommend you guys study these double tops, double bottoms at key levels. Once you find a good location to trade off, see how price reacts to those levels and look on M1, M2, and M5 timeframes and see how many times actually gives you the best moves and what could potentially give you the best win rate with the best RR multiple as well. Now, obviously, it's a very simple pattern. It's just a double top is when price goes up into our level and creates two M5 highs. And then you can enter as soon as sellers are stepping into the market, and then you can profit on a downwards move. And obviously, for a double bottom, it's the opposite. Price comes down into your level of interest, creates an M5 or M2 or M1 low, and little retrace to the upside, and then comes back down and creates a second low, which would be the double bottom. Now this could be double bottom, double top, or it could also be higher high, higher low. It's all very similar, whatever you want to call it. I just like to call it double tops or double bottoms. So these are my main patterns that I look for, especially on the M5. But then on lower time frames, such as the M2 and the M1, if you want to be on the safer side, you can first wait for a double top or a double bottom to form and then wait for a retest of the structure. Okay, so here you can see we have an M, whatever it is, M2 or M1 double top in our level of interest. Then price moves to the downside. Let's say you missed this move or you just don't want to risk being in every single M1 or M2 double top, as they fail quite often as well. And you can just wait for price to retest this structure right here, the structure low. Okay, and if you can find an entry over here, there's just a retest of the structure after a double top or a double bottom was confirmed. This is a lot safer to enter than right at the top here, especially on these lower time frames. Now on the M5, you will not see this pattern too often, as price usually moves quite quick on the S&P. So this is why if I don't see a double top or a double bottom on the M5, for example, then I would go down to the M2 and M1 and also look at price action and just see if there was a double top or a double bottom with a small break of structure and then a retest of that. Okay, so let's head to the charts and look at some actual examples of these entry patterns. So I have a couple of levels marked out to make it a little bit quicker for you guys and already show you how the market reacts to these levels. So this is a trade that I took yesterday, and I also have a trade breakdown of this trade, so I recommend you guys check that out on my YouTube channel. So we had this pre-market resistance right here, and as I mentioned in the previous video, the previous model of support and resistance, it's always important to wait for sweeps. Okay, and as you can see in this case, we had the sweep of the pre-market high. Now if we go down to a lower time frame, for example, the M5, we can see that the market opened right here, my time 3:30 or 9:30 EST time, and it immediately sweeps the pre-market highs, right? Sweeps the pre-market highs, sweeps the resistance high, and we can see an M5 high is being created, which would be our first high. Now the second high was created right here with this candle. Okay, so as soon as you see a candle coming back, this one or this one, into this small range, We'll mark it like this. This is a sign of a potential double top. Okay, if this candle obviously would have been closing outside of this range, beyond this wick right here, then obviously it wouldn't be a double top anymore. It has to really stay inside of this range. So anywhere here, as soon as a candle closes like this, you can wait for an entry opportunity, and then it really depends. You can even go a lower time frame, look for entry patterns. I personally use order flow. So as soon as you can see, well, things like the footprint or the bookmap can help you a lot with understanding or seeing when the buyers are getting trapped and when sellers step in. Now, me personally, I entered this trade a little bit to the later side. I missed the original entry over here at the top, so I was just waiting for price to come back, and as you can see, price had a move to the downside, came back up again, and as you can see, these candles closed again inside the range. And as soon as the sellers stepped in, this is where I was able to take the market short. If you can enter here in this candle, you can enter on the closure of this candle, whatever you want to do. Put your stop loss just above 2 points, 3 points, that really depends up to you, 2.5. I'll cover in the next module what I personally use for stop losses and targets as well. But this would be our entry. As you can see, clean M5 double top or even triple top in this case. Okay, so if you look down now, for example, on the M1 time frame, you will see a lot of double tops and double bottoms, and yes, of course they do, and they can get you trades as well. You can see right here we had a double top, so we had this high being created, and we had a small high here, so maybe you already tried a short here, you have a loss, price comes back up, it's still a double top with this, maybe you enter on this candle, you can get a nice move down over here. If you enter somewhere here, you can still get like 6 points almost, yeah, 6 points. So even with a 2-point stop loss, you can get 3R on this trade. Price comes back up again, creates another one, fails, goes a little bit higher, and then reacts again. So you can see on the M1 time frame, of course, you will see a lot of entry opportunities, and you will have lots of trades if you use the M1, which is not a bad thing. It's just really how you view it, and you need to study it for yourself and see how many times this actually happens. How many losses could you prevent if you would not use the M1 and maybe use more the M2 or the M5? You can see price took quite a while for the finally drop to happen, right? It took about, well, 45 minutes to actually start the massive drop that later on happens. So I feel with the M5, I don't really miss out on too many trades. It might happen that I miss out sometimes on a couple of smaller scalps. If I would be using the M2 and the M1, I would be able to catch them, but I will also have more trades and more losses. Okay, so let's look at the next level here. We had a H1 demand, as you can see. We had a clean demand right here. So we go down to the M5 time frame and see what happens here. So price comes back down. Obviously, it was already to the later side, so it was already 3 hours after the market opened. So I'm not trading at that time anymore, but you can still see the pattern. So we had an M5 low, price came back down again, another M5 low where you maybe can get an entry. Then this candle might have stopped you out, and then this candle again, maybe somewhere here at the bottom you could have found another entry, but then again the move wasn't too big, so this wouldn't have been a great winning trade. That's not to say you cannot take profits on a move like this. It really depends where your entry is and where your stop loss is. But this is just the entry pattern again on the M5 that I'm trying to show you guys. If you look on the M2, for example, you could see that as soon as price came into the level, it made a nice M2 double bottom right here. So if you manage to find an entry somewhere in this candle, obviously you can get a nice move up with a 2 or 3 point stop loss. You can have again a good 3-hour trade or 2-hour trade in a matter of minutes, right? And then price comes back down again, creates more M2 double bottoms with massive wicks, or maybe you get stopped out here, and then maybe you find a re-entry, and then again you have a nice move to the upside of about 7-8 points. Okay, let's go down to the next example. So we had this massive demand over here. I think it was like an H4, yeah, H4 or H1, yeah, an H1 demand. Obviously there was a lot of consolidation here, so I used the volume tool to adjust the drawing on this. You can see price came in this level, took quite a while, a couple hours, but then finally to react to this level. Let's go down to the M5 and see what happens. Again, this is even later. This is already 4 hours into the market open. Market comes to our level, creates this M5 low, comes back down again, and creates a second M5 low, which is a M5 double bottom. And this was also, again, a short move, 9 or 10 points move. So again, with 2 or 3 point stop loss, you can get a nice trade out of this. It's not the biggest move, of course. And price comes back further down and creates, again, M5 double bottom. So you see, usually price gives you time to actually enter even like an M5 time frame, which for some people who are scalping is quite a high time frame. They like scalp on the M1. When there's nothing wrong with that. If you can find a profitable edge, then why not? I'm just saying what works for me. So let's go down now to the M2 and see what happens there. So you can see here on the M2 time frame, price comes in and creates immediately a higher high, basically, or a higher low, and also a double bottom, right? Which is technically the same. So if you manage to find an entry somewhere over here, well, then this could have been a break-even trade, or maybe you take profits on this trade. It's 9 points, pretty decent, with a 2 or 3 point stop loss again. It's pretty good. And price comes further down again, creates another M2 double bottom. So you can see the lower the time frame, the more entry opportunities there are. But you just have to be cautious because you might get stopped out a lot more using obviously lower time frames. You can get very good entries and very tight risk and high risk to reward trades, but you'll just have a lot more trades and it's harder to spot which are the strongest ones and when that level is actually confirmed to to show that it might hold. And on the M1 time frame, you can just see how many times we have a higher low here and then it comes back down again, and then you have more double bottoms here where you might have get stopped out and maybe you enter here and then you have a good move, but then you have already 2 or 3 losses. And psychology is a big part of it. If you had already 2 or 3 losses and then you want to trade again, you might just say like, I shouldn't be trading anymore, I already have multiple losses, and then you might miss out on the good move, right? And you can see how many times this actually happens. They have M1 double bottoms and whatnot, and a lot of them work, a lot of them also don't work. Some would be break-even trades, so that's why I'd rather be on a M5 time frame, ideally for double tops and double bottoms. And the lower time frame, as I mentioned on the slides, I like to see the retest of structure. So let us try and find some examples of that. So let's go to another level and see what happens. Here, for example, we had the supply, price comes in, sweeps also the high of the supply, sweeps previous high as well, and then had a nice reaction of it, came back up again, another reaction of it, came back up again, another reaction of it. So let's go down to the M5 first and see what happened there. So here, for example, you can see on the M5 we didn't have any double tops. Price comes up. Here we do create a double top at this level of interest. Nice trade to the downside. Good move of almost 15 points to the downside. Very good move. It doesn't look big on the M5, but trust me, if you find a good entry and you have a 2 or 3 point stop loss, catching 10 to 15 points is insane, right? It's really good. Now price comes back up again, sweeps these highs, creates an M5 double top, and again, nice move to the downside. If you manage to find an entry here, you can get again 14 or 15 point move, very quick in just a matter of 20 minutes, 15 minutes. Some will go faster, some will go slower. So let's go down now to the M2 time frame and see what happens in this level. So we don't have a double top on the M2 over here, we do have it over here. And then you can see, for example, right here, that we create this double top. Maybe you don't want to enter right there. And then you have this structure right here. Yeah, you have this structure. And price breaks this structure and then retests the structure, and maybe you can enter right here, right? And this looks like a small move, but it's still 9 or 10 points to the downside, right? And don't worry, in the next module, I'll be showing you where to put your stop loss and how to look for targets as well. So a 9 to 10 point move with a 2 to 3 point stop loss is a great trade. Here again, what do you see? Price comes back to the zone, sweeps these highs, makes multiple M2 double tops, right? So you might be caught up in this chop. Maybe this candle took you out if you already tried to enter at the double top. And then we have this structure, right? You can see on the line chart, we have structure right here. And if you look on the candles, well, this would be the structure. You can also put the structure lower, of course. You can do it like this. And then what do we see? The structure gets broken and then retested, and maybe you find an entry somewhere here, and you have a nice, massive move to the downside. Okay, look at this move, 12 points, right, in a matter of minutes, 15 minutes maybe. So these are all examples of how I would enter the market. It's really important to wait for sweeps of highs and lows, especially I don't think I have any example right now, but let's say the market, well, this is a really good example, to be honest. Like we had this resistance. You can also call it a supply. We had a supply level over here, right? So if you would have this supply drawn and you would not have the resistance drawn, and you have this level right here, well, obviously, depending how you would draw your supply, depending also on the volume on the lower time frame and the consolidation in the range, you would just ideally have to wait for a sweep of these highs. It doesn't matter if it's pre-market or not. Like if it reacted from the level and it comes back, your best bet is to wait for the sweeps of the highs in this case and sweeps of the low in a demand and to create a new entry pattern. Okay, that's just your safest bet. So it's not really difficult to have good entry patterns. It's all about simplicity, keeping it very rule based and simple. These sheets, this slides is very important to me. It's just how I enter the market. I try to use these patterns every single time the market comes to my levels. I don't overcomplicate things. Either I see this pattern or either I don't. If I don't see it, then I don't enter, and if I see it, then I will enter. So I hope this video was helpful to you guys. Do your studying as well. Look at the different time frames on the M1, the M2, the M5. See how many times they fail. See how many times this pattern happens as well on the M1 and the M2, where you have double tops with structure, retest of the structure, or double bottom with a structure and a retest of the structure. See how many times that happens, combining that with the good supply and demand levels and support and resistance levels, which you already know how to draw now if you've watched the previous modules. All right. So anyways, guys, thank you for watching, and we'll see you in the next module.